Thank you, Elizabeth. Good afternoon, everybody. Definitely like to thank everyone for attending the webinar this afternoon. Just looking at the attendee list, pretty good number of people. A lot of you I don't recognize, so hopefully this will be a little beneficial for you. What we're going to do today, I'm going to kind of keep this short and sweet and to the point. This is basically a general overview of the professional liability products that we have available here. I'm going to kind of tier it into three categories. One is the specialty lines, what we call the specialty lines. The other is the general miscellaneous professional segment. And I am going to touch a little bit on the management liability side. If some of you have attended some of our other webinars, you know, we've gone into a lot of underwriting detail, coverage detail. For example, like on the tech side and the architects and engineers. I really can't do that with over 350 some odd classes of business. So I'm going to be very general. If you're a new producer or if you're new to working with Stuckey, this will give you a great idea of what we can and can't do, what some of our better appetites are, and how we can make your lives a little easier dealing with some of your submissions. Before we get started, just want to let everyone know that at the end of this, we will be sending out an emailed copy of the webinar. And if there's anything, you know, during this discussion that piques your interest, like maybe you're a specialization with real estate agents, if something like that stands out to you, let me know afterwards. I can send you some tailored marketing material, specimen forms, applications, really whatever you need. I mean, we're here for you, and the point of this is just to kind of acquaint you guys with what we can do on the professional side. And like Elizabeth said, we will do a small Q&A session at the end. If there's any questions, you can use the online tool there. If not, I will respond to everyone personally if there's, you know, anything specific you need. So with that said, let's go ahead and dig in. Just a little bit about me, since I guess a lot of you out there seem to be new. I've been here about 10 years with Stuckey and Company. I started out working in the general liability unit, basically just doing renewal processing and things like that. And back in the old days, before we were paperless, I worked in the issuance department with ACE on our technology program. And after about 6 months or so of that, I moved over and became an underwriter on the tech program. And I worked with Dwight, our CEO here, and we launched the miscellaneous professional unit in 2007. Worked with him as well in 2008 and 2009 to start our architects and engineers unit. And then I kind of wear a few hats. I've dabbled with some management liability underwriting, and I'm kind of involved with the marketing and the program development here. Basically what you're looking at on your screen right now, those are the bullet points of basically what I would like you to take away from this discussion today. Like I mentioned, I'm going to kind of break it down at the very beginning. We're going to go ahead and do it in a specialty. We're going to do it in a specialty format where I'm just going to go through a few of the different classes, like the accountants, the lawyers, things like that. And then we're going to touch on the MPL stuff and the management liability. And at the very end, you can see up there, we do have a couple of announcements we're going to be making, which could be very interesting for some of you. This slide here, just to give you an idea, this actually is not fully representative of the full carrier line that we have here. I mean, you can see some of them you might be familiar with, some of them maybe not so much. Some of these markets we use for literally one line, some of them we do countless products with. As far as actual contractual authority, like for rating and issuing with some carriers, Tutor, ACE, Chubb, and CNA are our main ones. But there's actually probably about 15 or so more carriers not shown there that we do have access to and use. So just to give you an idea, there's plenty that we utilize. Okay, I guess first thing I want to just mention before we get into the actual class categories, I want you guys to understand that when you send us a submission on professional liability, there's always a method involved as to who we're going to use to quote you with, why we do it. Think of it like this. Example one up there. Think of an accountant. Travelers in Philadelphia both have an actual CPA program. It's filed in the lower 48 in DC. But if you called me up on the phone or say, hey Chris, I got a CPA here that needs coverage, it's not that black and white. Once we get a submission in, we tear it apart. Maybe they're just doing bookkeeping. Maybe they're doing some basic tax prep work. Maybe it's, and the sky's the limit, but you called it a CPA. So I might be thinking travelers first because you need a true CPA form. Well, if they're just doing bookkeeping, I can write you with ACE, CNA, Chubb, the whole slew of carriers. And really at the end of the day, it's about the coverage itself. Example two, they're like basic filings. If you guys come to me and say, like some of the retail outlets have access to Philadelphia insurance. Well, if you already have Philadelphia, obviously we don't want to go to that market in this case. Or say you had a admitted or a surplus filed product and you need it admitted, or vice versa. Basically, just there's a rationale behind it. And three would be premiums. If you come to us and you've got an account that's already on the books and say they're at a $1,000 premium and you're trying to beat that, let us know. If we see a submission, there might be 10 different markets that'll quote it, and we know that. But if we don't know what you're gunning for as far as pricing or what their expiring terms are, we're in the dark. So basically what we try to do is take all this into account, because our job is to get you all, the best coverage at the best price. Because if we're not, we're all wasting our time. Let's see here. Go ahead and move on. Like I mentioned, I'm going to just touch on these very briefly. What you're looking at on your screen right now, these are what we consider the specialty segments. And the reason I say that is that each one of those bulleted hazard groups, they kind of have inherent exposures that are unique to themselves. For example, if you've got a notary public that needs professional liability, they probably don't have the same exposure concerns as a real estate agent. Like, for example, they're not going to have mold exposure claims where like an architect would. There wouldn't be an asbestos concern, things like that. Think of a software company, something that's going to fit into our technology forms. They might have some unique intellectual property exposures, things that, say, an animal service provider wouldn't. So basically, we've kind of identified those bulleted hazard groups as the specialty ones, and each one of them up there has a unique coverage form. Some of them are available from one market, some of them are available from several markets. But if you get a submission like that, and you sent it in just say on an Accord application, probably not going to be able to quote that. We're going to need some specific applications because there's some different underwriting criteria for those. If you want to move on to the lawyers tab there, I'm just going to briefly browse through these bulleted ones. Just to give you an idea, if you guys handle lawyers, our main playing markets for lawyer submissions on the professional liability are going to be Travelers, Chubb, Hartford, and Beasley. And really what determines the market availability on those is the size of the firm itself. For example, if you've got a small firm, Travelers is pretty much our only option. Chubb and Beasley, for example, they've got great forms, great coverage as well. But from an underwriting standpoint, Beasley likes the larger ones. They want to see the legal firms with 35 professionals and higher. Chubb likes to see 10 and higher. So really, when it comes to the lawyers, that's basically about it. The placement can be a little bit more challenging just due to carrier appetite. I kind of used the accountants as an example earlier, and you can see up there. Philadelphia, Travelers, and then I put others. That's one of those again where it comes into underwriting. If you sent in like an Accord app or a basic MPL app, we're going to have to dig a little deeper for accountants. It might specifically have to go to a CPA form. if they're just doing something like bookkeeping, I can group it in with a number of carriers. Geographic location, size of the firm, all going to play a part in the pricing and carrier availability. And that's basically about it on that. I just wanted to kind of point that out. Real estate is an interesting segment. It has changed a lot. Kind of gone up and down with the economy really since about, what, 06, 07. Right now today, Travelers, I would say, is our main go-to market for the real estate E&O. They have a great program in the continental United States. I do want to point out, as you can see on your screen, it is not available in California. But for example, they're an admitted product in most places. And if we did get something that, say, and when I say real estate, I'm talking about things like real estate agents, brokers, home appraisers, inspectors, property managers, things like that. I might be able to do it with ACE. We might be able to do it with Tutor. But that is an interesting segment, and there's a little bit more challenging underwriting that goes into that, especially if you're dealing with commercial real estate. It's a little bit more restrictive. Some states, and if any of you producers are out in California, you probably know this. I'll pick on ACE for a second. ACE has a great appetite. We write a ton with them in California for real estate lines, but there are minimum deductibles that apply to certain hazard groups. For example, real estate agents, I believe, can go as low as $2,500. But property managers and inspectors, I believe it's $10,000 and $25,000. So if you've got a small risk, I mean, if you've got a little, say $50,000 a year client, that's a pretty tough deductible to swallow, and that can be challenging. On the other hand, Travelers program isn't even available in California, so you might not have other choices. Tutor, we're actually a little bit new using Tutor in this class group, but so far they've been very competitive on the pricing. It is a surplus lines product, but the pricing has been very good with them as well. Medical professional. The one thing I really want to just drive home here, because everyone gets confused. Medical professional is not medical malpractice. Think of it like this. When we advertise that we can do medical professional liability, we're talking about companies like healthcare staffing agencies, laboratories that might do blood work, imaging facilities, mobile ones included, rehab centers, things like that, pharmacies. But when it comes to the the word medical there, it cannot be healthcare. So if you've got a nurse, not going to happen. A doctor, a surgeon, not going to happen. If there's any hands-on healthcare administered, that's sort of the defining line there. And you can kind of see the little bullet point there. I think it's the fifth one down. No individuals on this line. What that means is an individual applicant will not qualify for this program with ACE or Beasley. So, example, you get a pharmacy. If there are 5 pharmacists or 20 pharmacists or 100 pharmacists, that's fine. If it's an LLC, a corporation, it's fine. If you get Jimmy Smith, pharmacist, instant declination. We cannot write individuals on that coverage line. And you can see there, we can do up to $10 million in limits for qualified risks. And sometimes we can do the GL and the professional together on this line. This is one of those that we can group them together. So that's a nice perk, but I just wanted to kind of point that out. Not going to talk much about the technology. As many of you know, if you've used Stuckey before, we are the MGA for ACE Westchester on the technology line. We have been for about 15 or so years. We have in-house, we do it all. Full quoting, binding, issuing, billing, endorsing, basically every aspect except claims coverage. That's a whole separate legal issue. But we can do that with ACE. And for some reason, if you do have these technology risks that for whatever reason may not qualify with ACE, we have about 10 other markets we can approach. turnaround time is fast on these, and the coverage is very, very broad. ACE actually just refiled their forms a couple of years ago, and they've included things like the intellectual property. There's some first and third party security work, some electronic media, things like that. But basically that program, anytime you get a software developer, internet service provider, things like that, that's going to fall into the tech unit. And that's not something that we would quote in our miscellaneous unit, but I just wanted to point it out because that is one of those specialty segments, and you would be working with one of my partners here in the office on one of those. Architects and engineers. Another very unique segment, which I kind of referenced the ups and downs of the economy with the real estate sector. The A&E world is definitely changing. About 3.5 years ago, we launched our Aspire A&E program, which at the time was backed solely 100% by Aspen Specialty Insurance. That relationship ended in October of 2011 for a lot of reasons, and just discussing the A&E market in general, if any of you go after these types of risks, you probably know the companies like Zurich pulled out last year. They quit doing anything with, I believe it's $5 million in revenue or less. So they're basically getting out of the smaller market. Aspen pulled the plug on this deal. And then there's other carriers out there that we utilize, which you can see up there, like Beasley, Lexington, Travelers, Tudor. Their underwriting has tightened up a little bit. Things like geotechnical or structural engineers, which we used to have 10 different options for those. Well, that's not really the case anymore. A lot of these carriers have really taken it on the chin when it comes to claims, and it's being reflected now in the marketplace because some of them won't even touch them, and the ones that do, it is reflected in the premium. Especially for you producers that are in states like Florida, California, and I would dare say New York and Texas. I mean, just to throw this at you, accounts that we were writing as recently as last year for $2,500, like a structural risk in California. Beasley, I'll pick on them for a second. The minimum pricing right now is $10,000 for a $1 million limit and a $10,000 deductible. So now that's not to say that's our only market in California for those, but just to give you an idea of how that hazard group is changing right now, it's a little up in the air. There's a lot going on there. And then the last one I just wanted to briefly touch on in the specialty segment is the environmental portion. From time to time, we seem to get a lot of these submissions in that kind of coincide with the A&E risks, mostly because it's a lot of contractors. What we're looking for here are like your environmental consultants, people that are out there doing testing and monitoring, any of the phase 1, 2, or 3 assessments. And some of these companies are very, very large. We can actually go up to $25 million limits of coverage. And you can see there the minimum premium of $2,500 does apply. I can promise you if you have a $25 million limit policy, you're going to be well over the $2,500 pricing, but still wanted to mention it because we do see those from time to time, and in the past several years we've seen a big green movement, and there's a lot of these smaller consultants out there, so I did want to point that out as well. Okay, switching gears a little bit, kind of going into the main bulk here, the actual miscellaneous professional liability classes. What you're seeing on your screen there are what I've kind of termed as our most frequently, our frequent success rate, I'll call them. We actually can write, I think the exact number is 363 different classes of professional liability here. I obviously can't fit those all on one slide, but you can get an idea. I mean, really at the end of the day, what you're talking about is liability coverage to anyone offering a product or service to others for a fee. Notice I said for a fee. Sometimes we can do nonprofits on the professional side, but that's very uncommon. The rationale behind that is that there's just some different exposures. Think of it more from a fraud angle. You know, if you sent a nonprofit submission in, we can do the management liability all day long. We can do your GL all day long. On the professional side, though, that complicates things. There's a lot of, you know, gray area with nonprofits in the professional segment. And if anyone's interested too, like I said, I obviously can't list 360 some odd words on one slide. But if you would like to have a list of everything that we can write, I can break it down by carrier. Drop me an email afterwards, or I can maybe just have Elizabeth send it with the presentation to at least give you guys an idea of what we can and can't do in a more thorough manner. I wanted to point out the restricted classes. Again, I say restricted, not declined. Look at the red worded ones up there. Those are probably going to be your declines. Like I mentioned before, medical malpractice, we are not a market for that. We actually used to be. We dabbled with that, and in many parts of the country, simply, we just weren't competitive. None of our carriers were competitive due to the associations that a lot of the doctors and surgeons all belong to, and it really was just a waste of time. So we basically quit writing med mal through this office, I would say about 4 years ago. It just wasn't worth it, really. But you can kind of see up there, and a lot of it's common sense. I mean, like for example, the financial, you know, the investment advisors, when the economy tanked in '07, people are losing money. What are they doing? They sue. Nobody right now has a dire interest in writing investment advisors. I did list accountants up there. We talked earlier. We can do them. It's a little bit more challenging from an underwriting and placement standpoint, but we absolutely can do them. There just might be a few more hoops to jump through on those. Really, that's the same of everything up there. We can look at everything basically except the escrow agents, the medical malpractice guys, and the mortgage bankers. That is just very challenging right now. When thinking about a general submission, I would say 9 out of 10 times we can quote you based on any application. Basically what we're looking for is, you know, what is the risk doing, how much of it are they doing, and how are they doing it? You know, are they following good risk management procedures? Are their financials all right? Things like that. Some of the specialty products I mentioned at the beginning, you know, like the lawyers and the accountants and things like that, it's just the nature of the beast that there are more underwriting hurdles to get through. They have unique applications because there's unique underwriting exposure to them. So if you did, like, you know, hypothetically, you send in an Accord app and you say, hey, Chris, I've got a lawyer. I'm not going to be able to quote that off an Accord app. That's about a 10-page app, which sounds very not nice, but it's actually not that bad. It's a lot of yes-no questions. But the bottom line is, what you're looking at up there, there's a reason we asked for that. If you've got a submission that you're shopping that might not even be yours, they're just shopping it, and you're trying to get pricing and land an account, but they've got coverage now, we're going to ask for the declarations. We want to make sure that we're giving you guys an apples-to-apples comparison so that you can sell your product. We want to know what their current limits are, what their deductible, and maybe their pricing. I know a lot of people, you know, they'll come to you, you know, you guys as the retailers on the front line and say, hey, I don't want you to know the pricing. That's fine. They can white out the price. If we know it, it makes our job easier because, like I was mentioning earlier, if I know carrier A's minimum pricing is going to be higher than what they're at now, I can save you some time. I can save me some time. I can save the underwriter some time. You know, so there is a method to everything, and there is a reason we ask for it. I listed the valued loss runs up there. Most of the time, we do not ask for those, but there are certain class hazards that it's required. Architects and engineers, for example, we're going to ask. We need them. That's just how it is. Most other ones we can get away without it, but I just wanted to kind of make note of that so that you know there's a reason why we ask. Okay, and the last of the 3 categories here I want to touch on is the management liability. Obviously, management and professional are a little different, but it all falls within the professional liability world. Sometimes you can group these together on the same policy form. Sometimes they're going to be monoline. And what you're looking at out there, the D&O, the EPL, the crime fiduciary, and the kidnap, ransom, extortion, all of those are unique because carriers like CNA and Chubb and ACE and all them, you can actually mix and match those coverages on one form. So if you had a client that's looking for just directors and officers, we can write it. If you need D&O and EPL, that's going to be on the same policy. If you decide midterm to add the crime, we can endorse it to that same policy. It's not like you would need 3 separate policies. And a lot of people are unfamiliar with that, so I wanted to point that out. But basically, I'm assuming you all are familiar with those terms. In case you're not, though, just a quick little tidbit. I guess the directors and officers, of course, that's protection for the board members. You know, it protects the personal assets. It also protects the entity of the corporation if the company as a whole is sued, rather than, say, a member of the board just itself. Suits could be for anything from like improper management of funds. You could have creditors citing misappropriation or breach of trust. Even employees or volunteers could sue based on unpaid compensation, you know, poor working conditions, things like that. EPL, everyone thinks of the discrimination coverage point on EPL, which is obviously the big one. You're talking about discrimination for any number of things from color, race, creed, national origin, gender, pregnancy, sexual orientation, marital status, age. But there's a lot more to that a lot of people don't think about. Things like wrongful hiring and firing practices, obviously the sexual harassment, but there's first and third party coverage there too. You could have some wage and hour claims fall under that. And we've even seen things like the libel, slander, breach of contract, and even emotional distress fall under your EPL section of coverage there. Crime is basically your employee theft, burglary, forgeries, things of that nature. We've actually seen a pretty big spike in the white-collar crime in recent years. Employee dishonesty, and just today being a very technology-driven world, we are starting to see a lot of computer fraud claims coming through on the crime section. And then the fiduciaries, of course. A fiduciary is a person or entity with the authority to act on behalf of others or obligated to meet a standard of conduct. Sounds heavy. Basically, their responsibilities are defined by the ERISA Act, which is the Employee Retirement Income Security Act of 1974, and they're basically defined by that to protect fiduciaries of pension and benefit plans. So obviously there's a very unique exposure there as well. And the last one is the KRE. Some carriers just call it K&R, the kidnap ransom. Other carriers will throw in the E, the extortion. Quite frankly, a lot of people, it's actually funny in a way, because when people see that, they think, oh, I'm not traveling to parts of the world that are dangerous, so I don't need that. Well, you can have extortion claims right here. I mean, you know, Microsoft, their management team doesn't have to be traveling to South America to have a claim like that come through. And, you know, think about that. It can happen in your backyard. It doesn't have to be anywhere. One question that I get asked almost daily, and I can appreciate this because you guys are on the front line, you know, trying to sell these products. What's the minimum premium? What's it going to cost? Honestly, this is an awful answer to give you all, but it is the truth, so here it is. It is almost impossible to tell you. The long and short of it, like I said earlier, we're writing over 363 different classes of business. The minimum pricing for a notary public is different than the minimum pricing for a safety consultant. I can tell you, if it helps, the minimum pricing on the program is $500, which is very affordable. Sometimes that is going to be for lower limits. Sometimes that's going to be for $1 million in limit. But the bottom line, the minimum pricing is $500. I can pretty confidently tell you that The majority of risks that you see will probably not qualify for that. However, I would also say, especially given the marketing that Stuckey and Company does, we like to go after the smaller risks. We like the micro business. I mean, I'm pulling numbers here, but I would venture to say that probably, I would say 3 out of 5 of the accounts that we write are about 1,100 in pricing or lower. The ones that are higher than that are going to be your well-established firms with higher revenues, or the ones that are higher risk. Things like your safety consultants, your real estate guys, your architects, things like that. And I did put an example up there. Geographic location does play a role too. I realize a lot of you out there are licensed in multiple states. If you're used to writing in Illinois and you're used to going after a certain segment of business, you're used to binding these things for $500, $500, and then you get a client in New York, for example, and it's the exact same company. I mean, literally, they're doing the exact same work, same revenue size, same limits, but they're in a different geographic location. Your pricing could be different, even with the same carrier. In that example up there, I use ACE, and I'll let you read that on your own, but the point I'm making is that it is not the same everywhere. The same risk in Alabama is not the same in New York, is not the same in Washington. So just be aware of that, because it does vary. There's a lot of factors that come into play with rating names. Commissions, another one I get asked all the time. Every single quote we release on this program, whether it's a specialty line, a general miscellaneous line, or the management line, will include the commission we pay. There is a wide range of them. They vary greatly. It is, I believe, the absolute lowest we pay out is 5%, and that is on an international, which is actually a GL product, not professional, but it's an international form. That's 5%. And then the highest we go, standard, is 15%, and that would be for a larger A&E risk. I would say it is fair to expect 10 to 12% on almost all of them. The lawyers are going to be a little lower. Some of the accountants will be lower, the international. But it's a good idea to expect between 10 and 12% for all new business on this program. The vast majority, I'm thinking as I'm talking here, the vast majority of them are 12%. And keep in mind, too, some of them do change at renewal term. When you're writing a $500 account and we're getting 12% on new business, some of them do dip to 10 at renewal, and quite frankly, that's just a reflection of the profitability margins, the nature of the risk, that kind of stuff. But and you will see too, especially for you newer producers to Stuckey, there are times throughout the year where we will partner with certain carriers. Like I'll just go ahead and mention it now. We've got one coming up here closer to the end of the year around the holidays, where we're going to have an extra 3 to 5% commission available to all qualified risks. That's going to apply to any account found on the miscellaneous section with ACE, Beasley, Chubb, and CNA. That's still a few months off, and we're working with getting it all approved and all that. But there are ways we'll up it. We try to take care of you as best we can, and again, the point I'm trying to drive home here is it does change by product. So even if you sent me one architect risk and we quote it with 3 different markets, you might see 3 different commission rates. So don't see one and just think it's the same on everything, because it is not. And really, I mean, everything I'm talking about here, I know I'm kind of being general because there's a lot to cover as far as the hazard groups with the professional lines. Keep in mind what we're here for and what you're there for. It's all about the insured. Who are you representing? What do they need? And our job here at Stuckey and Company is to be there for you. We're here to provide you with quality products that are profitable for everyone, that provide coverage to the insured. If our turnaround times are taking 3 weeks, it's probably pretty hard for you to sell something to a client that just walked into your office. Basically, I just threw that slide together as a heads up. Let us know what you need. If you say, hey, Chris, I've got an appointment with this client at noon on Friday, let me know. If I don't know that, I might not be able to get it sped up. And packaging a deal that works. Sometimes we can put the GL and the professional together. And I know from an easiness standpoint, that's great. It's one bill, it's one policy, probably makes your lives easier. But I'm going to put my underwriter hat on for a second and just kind of give you a warning. Even the carriers we use that do that, and I'm not saying it's not a bad idea, but sometimes you're still better off getting a monoline GL policy and a monoline professional. The coverages might not be sublimited. You got to think about it in the best interest of your client. And what Stuckey and Company can do, we're talking professional liability today, but we have a commercial lines unit, we have a personal lines unit. Basically, we can do anything. We can do your GL, your work comp, your auto, your homeowners, things like that. So, keep that in mind and let us know when you send a submission in, and we can get working on multiple lines for you, and you can package a deal together. And, that's a win-win for everybody. And yeah, kind of following up on what I just said, the needs of the insured, we're here to meet your needs too. Like that first bullet point, marketing info availability. On the general miscellaneous professional stuff, I don't have 10-page documents that are going to help you sell professional liability to a graphic designer and a notary and a dog groomer and a court reporter. There's just not that much, it's what do they say, it's a mile wide, but it's only an inch deep. There's just not that much there. But on these specialty line items like your real estate, your accountants, your architects, your technology, things like that, I've got sell sheets, we've got checklists, we've got claim scenarios, coverage comparisons, things like that. If you're a small retail agent and you get a guy in your office that's a computer guru and he's speaking a different language than you are, you might not feel comfortable talking to him about insurance. I understand that. I've been in that boat. Let us know. We'll get you what you need to make you comfortable to even talk about the coverage. Or we can schedule, phone calls with you to help, grasp coverage concepts or, selling tools, pointers, things like that. Again, at the end of the day, we're here for you guys. We're nothing if we're not helping you. We can schedule agency visits. If you're ever in our neck of the woods, let us know. I am more than willing to set up conference calls or even personalized webinars. We can, the one-on-one thing. Every year we have representatives that attend the Plus conference. So keep that in mind. Again, we're here for you, and training is part of the game. Just a note about expectations. The Stuckey and Company standard goal for turnaround for every submission is 24 to 48 business hours. We hit that most of the time. In my world, you're going to think I'm a bad guy sometimes. Some of the specialty lines items, quite frankly, it's out of our control, and they just take longer. I used the example with the architects earlier about how the marketplace is kind of evolving, and what that has translated to is every single architect is shopping their policy every single year. And when you're a carrier and you're getting flooded with these submissions, and the reality is you're obviously not going to write every one of them as a carrier, it bogs them down. It takes time. And then things like the lawyers, for example, there's just more underwriting that goes into it. So, just have a clear understanding that if you've got one of these smaller miscellaneous risks, we can turn those around sometimes literally within an hour. If the information is there, if it's a clean account, it literally could take us a few minutes. But for others, right now today, like your lawyers, your accountants, your architects, things like that, it will take a few days. Right now, I would say on the A&E side for the architects and engineers, you could reasonably expect a quote anywhere from 2 to 5 days. Most of the others, though, very, very quick. Same thing with our commercial lines and personal lines. It's the same standard. We try to get them out fast. And let us know. Like I said, let us know when you send it in. If you've got a meeting or an appointment, let us know. We'll see if we can get it bumped up in the priority list for you. Actually, going back to that last slide for just a second, I just wanted to point out, too, the specimen wording. When you get quotes from us, whether it's from Ace, Beasley, Chubb, whoever, you're going to get specimen wording. If you don't want it, so be it. Let us know. We can change it for you, or you can just ignore it. But we do try to get those out with every single quote. We get a lot of people that want to sit down and have their legal counsel review it. Some people, quite honestly, don't care what's in there. Some will review every single word. But we want to be clear and concise with everything. Everything's laid out. That way there's no surprises to you or the insured when they go to bind a policy. Whoa, whoa, what's that exclusion? Or I didn't see that. You didn't tell me that. Everything is given up front. We just feel that's the best way to do it. So that's that. And then as far as billing goes, just a point. Most all professional liability is agency billed. There are a few products and a few carriers that are a little bit more flexible with billing. Travelers has some great direct bill options. CNA has some Chubb products, but you can expect for most professional liability that we will invoice for the full premium to you, if it's agency billed, and the payment would be due for the full term. If that is an issue, let us know. We have financing options available, or you can use your own financing. And then if the direct bill options are available, of course, we're going to make that known to you at the time of quoting. So pay attention to that because a lot of people get caught off guard with that, unlike some of the, the homeowners and personal lines kind of thing. And really just kind of a last point. I kind of mentioned it earlier. We're here to package a deal that works for everyone. We're here to help you. You're there to make money and produce quality coverage for your clients. If one of those are not functioning well, it doesn't work for anyone. And I want to just give you an example of something because I mentioned, we have a commercial lines unit, we have a personal lines unit, we have a professional lines unit. We can write all these coverages. But at the end of the day, it's all about your client. If your client's not covered and happy, it's all for nothing and they're just going to move it at renewal anyway, whether it's a service issue, a pricing issue, a claim issue, whatever. They have to be happy and they have to understand that we're looking out for them. So I'm going to use an example here. Everyone in the professional liability unit has probably seen the prices, for the most part, with the exception of like your architects and some goofy classes like that. For the most part, pricing has remained level and in many cases gone down over the past 4 to 5 year period. So think of the guy that's paying $10,000 for a professional liability policy. You met with him and you wrote it 3 years ago, okay? You got a check for 10 grand and he's got excellent coverage on his professional liability. You talked to him at that point about the need for employment practices or maybe some GL or some property. And he held off. Money was tight. He was starting his business and $10,000 was a big check for him to write, tough to swallow. Well, here we are 3 years later and he's still got that same policy in force. It's renewed now 3 times. But now his premium's only $7,000 because, well, maybe the economy slowed down or maybe one of his contracts is expiring and he just doesn't have the revenue flow right now. So you're saving him $3,000 on his professional liability. He's thinking, hey, I'm saving $3 grand on insurance. That is the best time for you to jump in and highlight what else he needs. That $3,000 that he was going to spend in the professional could be applied to things like his employment practices. And, some of those things, it's easy for me to, the underwriter to sit here and say, oh, they sell themselves. We all know that if you have employees, you have an exposure. But to the guy signing the check, it's not that simple. We get that. But that's kind of my point. If we can save him some money in some areas, You've done your job. We've given you a good price on a good product that you're saving them. But with that actual savings, you can turn it around and highlight their other exposures and adequately address everything. And I mean, I use EPL, that's kind of my default example that sells itself. Think about, I'll use the easy one, the sexual harassment. Everyone thinks sexual harassment. Well, okay, fine. You think of the unwanted advances in the workplace. Maybe it's your boss, maybe it's a coworker. Well, what about the third-party stuff? What about, well, we had the UPS guy deliver something today, or hey, the mail lady came in, or someone came in to service our fax machine today. You know, those are things no one thinks about. It's easy to say, oh, I don't have an employee, I don't have that issue. Well, this is America. Just look at our litigious history, because there's definitely an exposure there, and I think that's a great opportunity to do some cross-selling, prove your knowledge as an agent, and write more business, more commission for you, better coverage for them, and it's just a win-win. I know a lot of you are new to Stuckey and Company, and some of you may not even be aware of this. Many names up there I didn't even recognize, so this might be the first you're hearing about this. But we actually are in the middle of an ongoing incentive for the professional liability department here. Basically, any account you bind, that started about a month ago, but continuing through June 30th, every single account bound, you get entered into a drawing. It literally could be the cheapest account in the world or the most expensive account. You could write 10 a day, get 10 entries. Literally every account equals a chance. And the prize right now, you can choose between the new iPad or the new iPhone, or you can opt out for the cash prize. And that drawing will be held on July 15th. The winner will be contacted, and of course we'll be announcing that in one of our agent alerts. So hopefully everyone was aware of that, but if you weren't, now you are. So got a chance to get some extras there. And then I did mention earlier, we will be doing a commission incentive around the holiday season. We did it a couple seasons ago, and it worked out well. And you know, it's a great way to get some extra cash around the holidays. All right, and last but not least here. So those of you that have been with Stuckey for a while, you probably remember, I got two things to point out. One, I can't really go into much detail on. The Aspire A&E program, you know that it was uniquely placed with Aspen Specialty in the past, and we ended that relationship, like I said, back in October of last year. Since that time, we have been very diligently trying to replace that program. Where we are today, I mean, we do have other markets, don't get me wrong. We're using Beasley and Travelers and Tutor and all them, but we are very, very close to signing paperwork and replacing that. I can't go into that one for legal reasons yet and can't say who and all that fun stuff, but keep an eye out because hopefully in the next month or two we will have some big news there, and that should be back to an MGA status with Stuckey and Company, where we will be doing everything for the architects and engineers again. So keep an eye on that. And the last one there, the last bullet point, Chubb MPO. We are literally less than about a week and a half away from launching a new program with Chubb. We will have full underwriting, quoting, binding, issuing authority for many classes of business with Chubb and their miscellaneous unit. I can't get into all the details, but I wanted to announce that because this is a very big thing. It will complement some other products with them that we have, and some other products here at Stuckey will. And again, we'll be the MGA for it. It'll be like our ACE program for the technology. It'll be like our Marina program. We will be doing it all. It will all be in-house. It's an opportunity to do a lot very efficiently, and you know, like I said, write more business for you guys. Just throwing up some contact info there. If you have any questions whatsoever, you know, if you need marketing material or anything, give me a holler. I've got my name there. I've got my partner Andrew there. We've got our general inbox there. Anything you need, guys, we're here for you, and use us. And then I don't think anyone's mailing any submissions these days, but there it is. We've had few questions come in. I'm probably not going to be able to get to all of them, but I'll pick a couple here. First one, do you write professional liability for insurance producers? Yes, we do. We can write your individual E&O, or we can write the E&O for insurance producers as a client of yours. And yes, you would get commission on your own policy as well. We actually have about 7 different markets we can go to for insurance producers E&O. I would actually group that into the specialty unit. I didn't have a slide for it, but that would definitely be a specialty product. Kind of like those, geographic location is going to play a role as far as which markets are available. Right now today, I would say probably 95% of what we write for insurance producers is through Maxim or Century. But yes, absolutely, we can write your E&O, or if you go after insurance producer E&O, we can write the small mom and pop shops. We can write the large brokers. You will get commission on your own policy. Really, the only underwriting point I'll just make on insurance producers E&O, you have to have 3 years of experience. You don't have to be your own agency owner. You don't have to be running your own company. But you do have to have at least 3 years of somehow related experience. So that's that. Another kind of question, will you be providing follow-ups to this webinar in more detail? Yes. Yeah, and again, guys, this was a generic, kind of a general, MPL 101 with Stuckey. I can't go into detail on every single class code. But to answer that question, yes. We're actually going to specifically have a webinar on the new Chubb program probably in the next month or so, once we get all the details ironed out there. And I've also been speaking with carrier reps from like Travelers, CNA, and Chubb. So you don't get sick of hearing my voice. We're gonna collaborate, and we're gonna do a giant management liability one where we're gonna do a segment on directors and officers, a segment on EPL, and such. So yeah, there will be more coming. And if you have ideas, give us a shout. We can tailor some stuff to you all. And that's about all I've got. So I just want to say thank you to everyone for your time, and we definitely appreciate it and look forward to doing some business with you.
Thank you for joining us, and we will be sending a follow-up email with the webinar and be posting this on YouTube as well. Have a great afternoon.